Short-term debt financing instruments such as commercial paper are typically used to fund short-term assets or to see the organisation through a tough period or a time of cash shortfall. Funding of the organisation's working capital and new staffing hires might be best suited to short-term debt funding. Friendly pots could use promissory notes or commercial paper to raise some of this funding. Promissory notes typically mature in 1 to 10 years. These are a promise to pay the amount or face value specified on the note. Promissory notes are discount securities, in that they are sold at a discounted amount from the face value, that is, the present value of the face value. Promissory notes issued by Friendly Pots will only carry Friendly Pots' name, as they only carry the name of the issuer, who will pay the dollar amount to the bearer of the note. As such, they are negotiable and tradable and do not require endorsement of a third party when sold in the market. Bills of exchange are discount securities and typically have terms from 1 month through to 2 years. They are an order to pay on demand, or at a fixed future date, a specified amount of money to the specified person or bearer. There are 2 primary types of bills of exchange: bank bills and commercial bills. Bank bills are a type of bill of exchange where the bank takes on the credit risk and charges a fee for this. So it effectively acts as a third party or an underwriter to the transaction. Commercial bills are a type of bill of exchange where the borrower's or issuer's name is strong enough to stand alone, and so bank acceptance is not necessary. Friendly Pots may require additional raw materials costing $198,000 from its supplier or resources. In order to make the payment to all resources, Friendly Pots draws a bill with a face value of $200,000, which is repayable in 3 months. The bill is accepted and discounted by Bank XYZ, with $198,000 being the present value of the bill paid to all resources. Friendly Pots is then liable to repay the bank the face value of $200,000 at the maturity of the bill. A line of credit or overdraft facility is another short-term funding option available from a bank or financial institution. It is a suitable method for Friendly Pots to use to manage fluctuations in working capital requirements, but is a very short-term financing option because overdrafts are at call, which means they require repayment upon demand from the bank, and they generally have a higher cost or interest rate. Credit cards are also a form of overdraft or line of credit, but will usually have an interest-free period, for example 30 days, before an even higher interest rate is charged on purchases.